Hi, how to make sense of this crazy market? Let me quote to you two famous investors. The first is Peter Lynch. He famously said in his book that he made his money by buying well. That is, the only price you can control is what you pay. The sale price is out of your control. So you better buy when the stocks are really cheap. But after you bought, what then? Here I must quote a second famous investor, Jesse Livermore, who wrote a book called Memoirs of a Speculator under the pen name of Edwin Lefebvre. In his book, he said, I made my money not in the buying or in the selling, but in the sitting. What did it mean? He meant there's a time for buying, preferably in a panic, but also a time for selling, but the time for doing nothing and waiting. But waiting for what? Here, I'll give you my own opinion. And this is you should wait for euphoria to sell into. But how would you know there's euphoria? Oh, when it comes, you couldn't miss it, although you'll probably refuse to act on it. But how will you know it's here? Euphoria will be here when all the fearmongers today have been converted into raging bulls and are singing hallelujah to the geniuses at the Fed, thanking Santa for S&P 9,000 and forecasting S&P of 15,000. In other words, in my opinion, the market is not going to the moon, but it will get close to it before euphoria. But for what reasons? After all, this market is clearly overpriced. China is defunct and getting defunker. The US is bankrupt and getting bankrupter. And what's more, the big gurus are all selling. Like who? Well, Warren Buffett has 32% of his $1 trillion portfolio in cash. Ray Dalio issues daily warnings of a crash. And every day, more big name investors say we are close to the 1929 crash, which, by the way, I sort of agree with. Yes, a crash will likely come, but as the hero said in the Gladiator movie, not just yet. First, in my opinion, the market must get into orbit. But why? Because, in my opinion, we need euphoria to clear the air from all this gloom and doom talk. It won't go away all by itself. Remember that in April, with the S&P at 5,000, I advise you not to panic and not to sell. The market is up 34% since then, up 34%. And as you hear me now, I can see the market rising further, perhaps another 34%, perhaps 40% more, perhaps even more than that. But again, why? For the same three reasons I gave you in April, plus one more recent reason. The three reasons I gave you before were cash, fear, and the negative yield curve. Let me go over them briefly again. First is the huge pile of cash at the hands of investors. Warren Buffett is not the only one piling up cash. So do many institutional investors, also known as OPM runners. That's for other people's money. That's institutional pension funds, mutual funds, and the like. But unlike Warren Buffett, who doesn't care about being evaluated quarter by quarter, OPM runners do care a lot. And why? Because they don't outperform the market every quarter, or at most every 2 or 3 quarters, they're out of a job. So with a pile of extra cash on their portfolios, as the market keeps going up and up and up, they simply must throw more and more money at stocks to catch up with the market, or they'll be fired. I know quite a few who were, and many more who fear being fired in the next year. It is that fear of being fired by not outperforming the market which pushes OPM runners to buy a market which every one of them in his private heart knows is overvalued. In other words, the OPM buying is an autopilot, and this buying is destined to make the market zoom. When will the market top? Not before institutions run out of cash. As they say on Wall and Bay Streets, the market elevator never goes down empty, which means the market will go down only after OPM runners have spent all their cash, so that they couldn't take advantage of the coming cheapness. Okay, the first reason was cash on the sidelines. Now, the second reason, fear. At the market extreme, everyone is wrong. At the bottom, investors wet the floor. At the peak, all are euphoric. Sure, the rise will last forever. As proof, when the fear and greed index was 5 in April out of 100, it was extreme fear. The market floor was wet with investor fluids, so I advise you not to sell, preferably even to buy. I hope you listened. Since then, the market has gone up 34%, as I said, but not the fear and greed index. It was at 5 then, extreme panic, but is still only at 40, well below neutral of 50, let alone greed and euphoria region. These are still absent. There is still a dark cloud of fear in the market, which causes OPM runners to still hold on to cash to buy when the crash finally comes. But the market gods are ornery, and they keep the crash in the closet until everyone runs out of cash, including you. And only then they let it happen, when we can take advantage of it. So, yet again, why am I so sure the crash will eventually happen? This brings me to the third point, the yield curve, the difference between bond rates and short-term rates. When it's negative, it indicates the economy is very fragile and about to break into a recession. It never fails. And then it also augurs an eventual market plunge. The longest the negative yield curve lasts, the deeper the resulting plunge. And as I told you before, the recent negative yield curve, which ended in January this year, lasted more than 2 years, even longer than the previous one in 1928, 1929, which to me means that the coming crash will be as bad as the one in 1929, down 82% then, probably the same now coming up. Yes. So why am I bullish now? This leads me to the new reason, my toy AI, a pattern recognizer that tells me what other market periods this current one most resembles. It is built around a 40-year-old app added to Microsoft Excel called BrainMaker. It uses data all the way to 1910, which is as far back as Fred's data goes. Fred is the Federal Reserve Board database in St. Louis. This toy AI tells me we are now most likely to be in 1928 or 1999. Both were the Zoom years before the crash years. How big a Zoom? In 1928, the Dow zoomed almost 50%, and then came the 1929 crash of 82%. In 1999, the Nasdaq zoomed more than 150%. Yes, before came the crash of 2000, down 90%. And my toy AI tells me today is very likely a similar period. What exactly is it based on? It's based on a collection of past market data that my AI scans to see what resembles today's environment. It brings up possible past comparable times colored from red to pink. Today's color is deep red, just like 1928 and 1999. 2007, by the way, at the peak before the great financial crisis, was merely pink, not as bad as today. Which brings me to euphoria, with which I began. There's so much fear around and so much talk of crashes and smashes that just based on my own 50 years in the market, yes, 50 years, I could probably tell that the market must zoom here to clear all the fear and bring in euphoria. But how could you tell objectively when euphoria comes? Oh, you would know. I'll give you two numbers to make it easier. The market level and the fear and greed index level. In market terms, the S&P 500 will likely shoot well north of 9,000, just to resemble the rate of rise of 1928 and 1999. And in fear and greed index terms, the level should reach 85 or 90, maybe even above, like it did in December 2019, a month before the COVID crash of 2020. How soon will this arrive? I would say probably Q2 to Q3 of 2026, using the market rise of 28 and 99 as models. But how will you know otherwise, beside the numbers? My guess is that by that time, your own fear will disappear and you will feel a strong urge to add to your zooming portfolio so as not to miss out the rest of the rise. In other words, a strong feeling of FOMO will be your own personal sign. How else would you know? I would say your barber, a supermarket cashier, your father-in-law, all would boast of their market gains and give you stock tips. Again, just like 1928 and 1999. But until then, in my opinion, it is best to wait and actively do nothing, waiting for the euphoria. When it comes, I'll try to tell you of it, but you probably wouldn't want to listen. Just you didn't want to listen in April when I said bye 35% ago. It's all for today. Please let me know in a comment below what you think of the above. Give it a like, subscribe to the channel, and tell all your friends and subscribers so they subscribe too. And buy my books, The Sloth Investor, The Advanced Sloth Investor, and if you like them, give them a review on Amazon, which I hope will be good ones. I'll see you next time, and meantime, thank you very much for watching.